Welcome everyone to a recap of week one. I thought after a week of where we bought five new stocks, I thought I'd do just a quick recap and talk a little bit about each of them. Before I begin, please take a few seconds to read this. You can pause the video if you need to, but just please read it and let's go. So this week, by the numbers, we had five stocks, three uranium stocks, two stocks at about 3 to 3.5 times cash flow, three different resources, and 1,127 shares. So I figured this was a good opportunity to explain why I like each of the stocks in about 2,000 words each, or maybe just two pictures. On day one, we had Denison, which has one of the top three development projects in the world in a great jurisdiction. And they're doing something innovative. They're bringing in situ recovery to one of the highest grade projects in the world. And it's making their costs truly out of the league of almost any other project. And in addition to having this great project, half of which you see there on the left, the Phoenix part of their Wheeler River, they also have a bunch of land in one of the most high-grade uranium basins in the world. And for that reason, I really like Denison. On day two, we bought some Argonaut, which is a gold mining company, and that sector hasn't been particularly great recently. But they're just too cheap, in my opinion, to ignore. Like the picture on the left, where they have some compelling metrics of how inexpensive the stock is, was from when the stock was almost 25% higher from where it currently is. And not only that, they're growing their current production from their existing assets, and they have two more assets that are bigger than either of their producing assets that they're ready to build up and grow on in the future. I really like what they have in store. On day three, we bought some Chorus Entertainment, which is a Canadian media stock that's trading at about 3, maybe 3.1 times a growing cash flow. And they pay a big juicy 4.5 or 5% dividend. They recently cut it, but the new one is for 4.8 maybe percent dividend. And they have some great channels that are real mainstays in Canadian households. On day four, we bought some GoviX, which is really the uranium of uranium stocks. It's exotic. It's from Africa. It has tons of pounds in the ground. It's getting ready, which is just like the uranium market at this point. It's fully permitted. And why I like it is because it could really benefit if the uranium price goes crazy again, which it did last time. And it's one of the closest to production of any of the uranium developments currently out there. So I think this thing should do decently, but could do amazingly. Finally, on the last day of week one, we had Plateau Energy Metals, which is a lithium uranium mix company based in Peru. And they have had they've had a nice run here, but they still have insiders that have been buying at higher prices than it's currently at, and so that shows that they have some conviction. Um, Now, what really struck me about this company is their Makusani project and its economics. And if you look at most of the uranium companies, they assume maybe $65 uranium for their projects, but this one assumes $50 uranium. And at $50, its net present value is much, much higher than the share price. And I don't know if it's ever going to get to its net present value, but this project strikes me as something that could be something that goes into production. And it's a lot of uranium too. So here's a look at the performance of week one, and just a sobering reminder, anything that could go up this quickly could sure go down this quickly. So we had a lucky week, and we'll see what the next week brings. Just a reminder, I'd love to hear from anyone's questions, comments, opinions, or ideas, because